Hello everybody, this is Lara from Pure Elliott Wave. I'm going to try and make this quick. I have a trouble with that. I have a lot to say, but I'm going to try and make this a relatively quick update for you for XRP. I just want to have a look at a couple of things on this monthly chart. First up, 5 steps forward, 3 steps back. That's wave 1, wave 2 at cycle degree. If you're new here and you're having trouble understanding my charts, head over to my website. This is the home page. If you scroll all the way down to the bottom, you can pick up this free notation. It's a PDF. You don't need to give me your email address. You just need to click on it and download it. It gives you the color coding I'm using. It gives you the name of the degree, and it gives you a guideline as for the expected duration of each degree. Understand that these guidelines are very rough and must be applied with flexibility. That'll really help you read my charts. So cycle 1, 5 steps forward. Cycle 2, 3 steps back. Within cycle 1, primary 3 was 14.72 times the length of primary wave 1. That is not a Fibonacci ratio. I'm just noting how long these waves are. Notice that primary 5 is longer than 3 and it achieves that length in a fraction of the time. This is where you get the greatest profit of this 5-step forward pattern. It's the 5th wave. That is really common for cryptocurrencies, especially when it's a 5th wave to end a 3rd wave 1 degree higher. So intermediate 5 ends primary 3 1 degree higher. I expect this is where you're going to get the most profit out of primary 3. So I'm not selling my XRP until at least primary 3 is over. I would much prefer to hold on until cycle 3 is over. I don't want to miss getting the profit of primary 5 to end cycle 3 1 degree higher. This is where I expect we're going to see the greatest profit of cycle wave 3. On to my targets. I've done some work on my targets today. I'm still going to hold to 48.94 for cycle 3, and I'm going to consider it could end March 2028 if it lasts a Fibonacci 8 years, give or take maybe even 1 or 2 years either side of that. This is a very rough outline. For targets for primary wave 3 on the monthly chart, I'm considering September 2025 if it lasts a Fibonacci 34 months. Primary 1 lasted 12 months, one short of a Fibonacci 13. Primary 2 lasted 18 months. 3 short of a Fibonacci 21. So September 2025, give or take either up to 3 months either side of that. So a 6-month window. So this is a very rough guideline. I'm using 14.72 to calculate this target, 27.44. That's not a Fibonacci ratio. Again, that's how long this 3rd wave was to this 1st wave in the first 5-step up pattern. The all-time high at 3.2 has been exceeded. We have 3.4, but when we get to technicals, I'll have some words to say about that. Eventually, when intermediate 4 arrives, a core Elliott Wave rule, it may not move into intermediate wave 1 price territory below 0.9301. I've drawn a base channel around primary 1 and 2. I've drawn it from the start of 1 to the end of 2, placed a parallel copy at the end of 1. It kind of showed where the low for intermediate 2 found support. I expect the upper edge might provide a little bit of resistance before the bullish momentum of primary 3 has the strength to carry price above the upper edge of a base channel. That's how you use a base channel. There are 2 ways. In the opposite direction to the trend, it will provide support or resistance. In the direction of the trend, it should be breached by the power of a 3rd wave. And when that happens, that adds confidence in your wave count that it is a 3rd wave unfolding. So I'll be watching that trend line carefully. Let's go to the weekly time frame. I think we're going to go from the end of primary 2. Yeah, this down here now have intermediate wave 1. This is leading, expanding diagonal 1, 2, 3, 4 overlaps 1 as it must for a diagonal. The rule for 4 of a diagonal is it may not move beyond the end of 2, and then we have 5. The lines are slightly diverging and the subdivisions all fit. This is a zigzag, this is a zigzag within a leading diagonal. The subwaves are most commonly zigzags, but they may also appear to be impulses sometimes. And when that happens, it's usually the 3rd wave. But here I expect they're all zigzags, and this perfectly meets all Elliott Wave rules for the structure, and we've got the overshoot of the 1-3 trend line for the 5th wave. Intermediate 1 lasted exactly a Fibonacci 34 weeks, intermediate 2 lasted 51 weeks. 4 short of a Fibonacci 55. So these waves are exhibiting kind of close to Fibonacci duration. So understand that my estimations of when future waves may end, you have to have 2 or 3 either side of these numbers, these dates. February 23rd coming up, if intermediate 3 lasts a Fibonacci 233 days, give or take about 3 or 4 days before, 3 or 4 days after. We're going to have a window of time, not just a specific date. So be aware you have to apply a little bit of flexibility with these dates. Now, if primary wave 3 lasts a Fibonacci 144 weeks, it may end on the week August 5th. Now, this is quite close to the September date I have in the monthly time frame. And remember that September, give or take a couple of months or so either side. So this date is going to work with that September date. This is trying to narrow it down. The September date I'm calculating in months. The August date I'm calculating in weeks. I'm going to still use both calculations, and they do work together because you have to be flexible and understand that it's for this 1, 2, 3 or maybe even 4 weeks either side of this week of 5th of August. And then that could be a close enough to a Fibonacci duration to say that it's been a close to Fibonacci duration. It's going to give us a range of time that we're going to look for. Now to the target price points. I'm adding this target for intermediate 3 because I don't think my targets are high enough. If these targets, these price targets are wrong, they're not going to be high enough because this is a nested third wave. This is primary 3, remember the monthly chart, within cycle 3. Nested third waves, the power of multiple big third waves, primary and cycle, that's an incredibly bullish wave count for this market. And this market exhibits extreme volatility. It can move in vertical upward movement for quite a while. It's done it before, it'll do it again. And so if these targets are wrong, they're not high enough. So the first target here for intermediate 3 is probably too conservative. It certainly looks too conservative now. If it's just 6.854 times the length of intermediate wave 1 at the end of 4.84. But remember, primary 3 to 1 within cycle 1 was 14.72, a lot longer than 6.854. I have said repeatedly, I think this is really conservative, probably too low. So today I'm going to give you a higher target. What if intermediate 3 is 11.09, the length of intermediate 1? That is a Fibonacci ratio. That gives us a target at 7.60. If intermediate 3 lasts a Fibonacci 233 days, it'll end February 23rd, give or take a few days either side of that. I'm moving the invalidation point up now that this triangle for minute 4 is complete and we've got 5 has moved beyond the end of 3. It's avoided a truncation, so within 5, no second wave correction, may move beyond its start below 2.2. Let's go to the daily time frame. We're going to go for the end of minute 3. This high here, minute 3 lasted 39 days, 4 longer than Fibonacci 35. Minute 4 lasted Fibonacci 34. Minute 4 lasted 36 days, 2 longer than Fibonacci 34. So they are kind of close to the Fibonacci numbers in the Fibonacci number sequence. So again, just be aware, we might get kind of close to this. So it's worth estimating when it may end, but please apply flexibility because these waves are not accurately, perfectly exhibiting Fibonacci numbers from the sequence. Minute wave 3 was 11.4 times the length of minute wave 1. That's kind of close-ish to the 11.09 Fibonacci ratio, so that's good to see. Minute wave 4 was a 29.2 correction of minute wave 1 at its orthodox end, at this low, not the deepest part of it, just down here, a little bit too far off 23.6 to say that it's exhibiting a Fibonacci ratio there. So the depths and lengths of these waves aren't always exhibiting Fibonacci ratios. So again, when I'm using Fibonacci ratios to calculate targets, understand that these waves may not exhibit a Fibonacci ratio perfectly. They may get kind of close. I don't know. Well, as we get closer to the end and I have more structure, I'll try and give you what I'm more confident of. I'm not totally confident of these targets yet. Within minor wave 3, it's unfolding as an impulse. We've got the end of the third wave, fourth wave triangle. Now we're looking for the end of a fifth wave. I do not think it's over here. Now I could move the degree of labeling here and I could adjust the labeling here and say it could be complete here. I really don't think it is because I am expecting minor 3 to end with some vertical upward movement. Huge strength. Remember, it is the fifth wave to end a third wave 1 degree higher that you get the biggest profit from. They tend to be vertical upward movements moving a great distance in a fraction of the time compared to the counterpart third wave. So I expect minute 5 to end minor 3, 1 degree higher, to be the greatest profit of minor 3. So I don't think it's over here. It could be, but I think that's really unlikely. So What if minute wave 5 is 1.618 the length of minute wave 3? That would give us a target at 6.11. I played with some targets at minor degree, can't find anything that I think is reasonable, so I'm going to use it at minute degree. I'm going to expect that minute wave 5 in minor 3, 1 degree higher, is going to be where you get the most profit of minor 3. So I'm expecting to be longer than minute wave 3. So 1.618 could actually be too conservative a target. Now this target doesn't work with this target for intermediate 3, 1 degree higher, but this target does work with the new target for intermediate 3. So if this is where minor 3 ends, and I'll discard this, I'll work on this and possibly even calculate something higher then for intermediate 3. So for minor 3, I can now calculate the target at 2 degrees, at minor and minute. I'm going to go with minute degree because after playing with some numbers this morning, I think that's going to work better. When I've got 1, 2, 3, 4 complete, and I know the starting point for minuet 5, then I'll be able to calculate it at 3 degrees. And I'll play again with the numbers and I'll see if I can get some targets that are really close together and see if I can get a small range that has a higher probability. That's always going to be the approach to target calculation. So as there's more structure to analyse, you can do more with it. That's when the targets are going to change, widen to a zone, or I might have more than one target for you. So targets are going to change as we get to the end and I have more structure to analyse. I've had a play with when minor wave 3 end. If it lasts a Fibonacci 233 days, it may end March 26th this year. Now that doesn't work with the first estimation for intermediate 3, but I'm going to give you now a second estimation for when intermediate 3 may end. So this estimation works with this estimation. If intermediate 3 lasts a Fibonacci 337 days, it may end July 17th this year. And that does kind of work with this estimation of August for primary 3 or the one on the monthly chart for September. So I'm expecting an absolutely huge year for XRP. The structure to end minor wave 3 has minute 3, 4, and now we need a 5-wave structure for minute wave 5. That'll be labelled minuet 1, 2, 3, 4, 5. There are only 2 possible structures for a 5th wave, an impulse or an ending diagonal. XRP does leading diagonals a lot, but it doesn't tend to do ending diagonals. I think the probability of an ending diagonal here is really low, so I will expect minute wave 5 to be very, very likely to unfold as a simple impulse. So the structure has to meet all core Elliott Wave rules for that most simple structure. So 1 has to be a 5, 2 has to be a 3, and it can't move beyond the start of 1 below 2.2. 3 may only be an impulse, has to move beyond the end of 1, and then 4 has to unfold, be a correction, and may not move into wave 1 price territory, and then 5 has to subdivide as a 5, should move beyond the end of 3 to avoid a truncation. I'll be looking at technicals really carefully at the end of minor 3. Let's go have a look at those technicals now. Zooming in at the daily time frame, we had this important high for XRP. We had a big consolidation with resistance about 2.7, support was about 1.9. That relieved short-term extreme conditions. Now the moving average situation is full bore bullish. This yellow average is a 13-day, that's a Fibonacci 13-day. The purple line is a 50-day moving average, and the green line is the 200-day moving average. There was a golden cross well off to the left of the chart. The moving average situation is full bore bullish. Finding resistance now about 3.32. That's the previous all-time high. It has not closed above that yet. And I did say in my last video, if we don't see price close to a new all-time high on a closing basis, not just a high, then look out, we could see a little bit of a pullback and look for support at 2.7. We absolutely got that. On January 19th, support was at 2.8, just a little bit above that area I identified for you. I expect this is going to hold, and I expect that today, maybe tomorrow, maybe very, very soon, we may see a close above resistance at 3.32. And again, I will say again, if we do not close above 3.32, then you could expect we might see another test of support about 2.7, and it could be ever so slightly below this, so it could actually test 2.7. But so far, the current candlestick for January 20th is looking fairly decent, but it's only 4:30 a.m. Eastern Standard Time. I always use Eastern Standard Time for all of my charts. Watch how this session closes. If it does close and look like a strong green candlestick, we may have a bullish engulfing candlestick pattern or a piercing pattern. If the close of this candlestick is above the open of this candlestick for January 19th, we'll have a bullish engulfing. If it has support from volume and that volume is stronger than January 19th, that would be a really strong bullish signal. I would expect a close to new all-time highs the next session, most likely. But if the January 20th session closes only halfway into the body of January 19th, then it'll be a bullish piercing pattern that's not as bullish as an engulfing, but it is a bullish reversal signal. We might get an imminent close to new all-time highs. So watch January 20th carefully. Expect support for any further consolidation to now hold quite strongly at 2.7. We've got support from upward movement by volume, a little bit of short-term support for downward movement, but the downward sessions are a lot weaker than the nearby upward sessions. The volume profile is bullish. ADX is now declining. It previously gave us a very strong bullish signal. It won't take much to make the black ADX line again have a positive slope, and if that happens, we would again have an indication of an upward trend in a very, very early stage for XRP. Tiny little pullback for January 19th has brought RSI back into neutral, so there's plenty of room for the larger upward trend to resume. Money flow is still neutral, and range is starting to increase after that consolidation, and we got a new all-time high, but not on a closing basis. We did get a new all-time high. Now we've got a tiny little bit of a consolidation, but range is still increasing. Volatility is favouring the upside. This is very, very bullish for XRP. That's it for me. I hoped it was going to be a quick update, but unfortunately I have so much to say. If this is really difficult for you to take in, I'm sorry. It is complicated. Just look at the Elliott Wave charts, look at the arrows, that's the direction I expect. I've given you targets, I've given you time estimations. You can take it at a superficial level and that's all you need. But I'm trying to give you the depth for those who really want to learn Elliott Wave and for those who understand technical analysis in any reasonable detail. It's up to you how much you take out of it. I hope you all had a good weekend. I'm heading back up to that mountain today. After my injury, doctor said 3 weeks. I'm like, nah, give it 1 week. Let's see how we go today. I don't know if it's advisable, but oh well. I really don't want to wait any longer. It's just too much fun, that snowboarding.